All right, welcome everybody. Doug here with the LincolnList.com. This is the weekly market report for the 19th of September. Hope all went well with you last week. And we got an extra day off this week, so I hope you at least got a chance to kind of sit back a little bit, maybe do some extra studying, get yourself ready for trading this week. It's always nice to take a little bit of day off. Also, while I'm here, don't forget we're going to be doing the webinar on Tuesday night from Chump to Champ. We're going to be talking a little bit about the market here in 2016, as well as some of our educational services. So make sure you register there for the webinar. The link is below. Now, let's talk a little bit here about the SPY. We got into that level. Really, it's just been all selling. I mean, really all selling since the beginning of the year. There was like one bull day and immediately got wiped out the following session there on Friday. Completely gets taken out. All the Thursdays, 400-point move, completely taken out on Friday. So the market's really having a hard time. And like I said in a couple of these other videos, some of you who started trading a couple years ago, this is all new to you. You haven't seen a market like this, so you're going to have to be prepared to deal with the kind of bull market. It takes more than just knowing how to short stocks. You have to understand how these things work. And as I said, we only had one day last week that got some buying completely taken out on Friday. We got into this level that we talked about in last week's video on the 29th. Just kind of dipped right below 186 there, and you see that was finally the washout point, or at least the lows for Friday. Then it bounces back up in here to 188. If we start going down lower, or we gap down beginning on Tuesday, I think in order for you to really get this thing flushed out, we're going to have to test this lower area of 182. The flash crash lows to take us all the way back to, that would be all the way back into August. And I think you need to see that level to build off of it and just kind of shake everything out. As we kept talking about, we keep talking about this flush over and over again, and the market really hasn't done that. There's been a couple of spots where you've seen some aggressive selling, but you really haven't seen that flush. And that flush is the capitulation point that will just flush everyone out, stop everyone out, and reset everything. So you still don't have that. It's a good possibility you even see some additional lows. Now, underneath of this, I don't know how far we'd have to go back. We probably have to look at a weekly chart here. You'd probably look at somewhere maybe 180s, which would be the low from 1013. That would be on the 2014 year, and then possibly going all the way back into January of 2014. So those would be my next two. I mean, if we blow right by this, if we test this level, let's just say we gap down, we start flushing, and you're looking for the next bounce point. Keep your eyes on 182. That's a good spot right there. If that goes under, there's a little bit of support right there, 180, 150, so that's not too far apart. And then underneath of that, you might want to look at possibly 180, 119, and of course 172 being even more solid. And that's taking us all the way back into 2013, any one of those supports. So you can see how far back the market may have to go to correct itself. Now, if we do bounce, I don't know how far a bounce would be. I think at this point I don't see a catalyst right now that could send you on multiple day bounces. Now that could change at any moment. You'd have to look at 192, maybe mid 190s, and then back to the whole number of 200. But I really think at this point we're going to continue to see a lot of what we've seen right now until really a good catalyst comes along and you start seeing maybe some lower highs, some higher lows, in the market. A couple of days maybe where you get a strong day and it follows up with a secondary strong day. Like I said, you didn't get that. You had one little push there on Thursday, and a lot of people were banking on a gap up, and they didn't get it. The market just gets completely cleaned out. So if that continues, you're going to see much lower here. But we'll see what happens as the week goes on. Now, a couple of stocks I'm looking at. It's just been, you're trading a lot of these beta names, and you're just kind of looking for what's happening right at the moment. But one of these stocks that has my interest here is this Qorvo, QRVO. It's been kind of busted in two, like a lot of stocks, some a lot more than others. But and when I say I'm interested in these stocks, only a certain scenario has to set up, or I just don't want to deal with it. I'm just not going to trade the stock just because it's down a lot. It's going to have to do a certain thing, which is flush out. So let's say we begin the day with a gap down and a flush, and you start out and this thing is already down, like down 7% on Friday. It begins the day at 7%. I think you have a tradable buying stock. When I mean tradable buying, I'm talking about a day trade. I would not hold this overnight or expect this thing to rally back up to 43 or 49 right now. I don't think that's that's not what we're talking about. We're just talking about a quick trade here, or something like what you saw a few days back, where it flushes out early like this, pops all the way down to 38.91, and then immediately jumps right back to 41. That's the trade I'm looking for. If that doesn't set up, there's no way I'm going to trade it. I'm just going to buy this thing just because it's down a lot. Because if it keeps doing what it's been doing, which is not flushing, it's just slowly selling, then it could just bleed out for the rest of the day. You'll never, like you looking here Friday, you really didn't get a bounce. Even on the big market day, you didn't even get a bounce out of this thing. So it's a turd for sure, no question. But you're just looking for maybe that flush out to get that bounce. Again, if it doesn't set up, there's just no way I would take that. Now, Kite here, on the other hand, has been pretty solid over the last few days. Even with a crappy market there on Friday, it's held up pretty well. If you look for the last 3 or 4 days, it's been stuck in this upper range right here of 57, 54, and then this bottom range right here around 49. So it's kind of stayed within that tight little space right there. If things are strong, this is what I'm kind of looking for. If we have a really strong market, then maybe over 58 here, you got yourself a pretty good trade. Now, when it comes to buying these stocks, I say strong market. If it opens up with a gap up, there's no way I'm buying anything in the market. I don't trust the market right now enough that if it gaps up, that you got to be buying stocks. No, that can't be that. Maybe if the market goes green to red or opens up flat, or you get a strong open, a pullback, a good basing area, and then a grind out like we saw on Thursday, where you can see that you're going to get grinding throughout the day, then something like Kite could be a pretty good buy. It seems throughout all of this, it's held up pretty good. The chart looks actually decent for a bounce, but again, it's going to be tough to buy stuff and really stay in the pocket when you've got a market that, in my opinion, any minute can get rug pulled. I still think short's where you need to be. Anything that rips like this thing has done, like here in the morning, rip, short, a pop the next day, short, here again, another rip. It's probably better if it gets away from you a little bit and the setup isn't quite there and it starts ramping. It's most likely a short. But just in case something happens there, I would be looking for a long. And when here, I'm kind of looking at short. It's been a pretty good tradable stock, but news with this one was all grinding, and I just think 13% is just a little too much for this thing in a single day. Maybe nobody else had anything to buy on Friday, so they were just looking for something, and Win was green, so they're like, oh, let's buy some Win. If this thing takes off, let's kind of looking at this scenario, we get a gap up, and a lot of stocks lift, and this thing gaps over, you're talking 61 or 62 to start the day, I'd be all in this short. I'd be straight in that short, right off the opening ramp, right into it. Now, that might not happen. If it flushes out, let's say it starts the day just sucking, going down to 56 or something, no, I don't want to trade that. That's not the setup I'm looking for. So I got some ideas here, but really right now, most of these ideas are coming like right on the spot. Like you're just seeing them right there in the morning, trying to forecast them overnight into what might happen in a volatile market right now. It's crazy. You can't do that. It's difficult to try to predict that far ahead. So what you're doing here is, kind of think about your overall strategies right now. I think if you gap down and wash out, and I mean just bury right at the open 400 points down at the market, you might reach a capitulation point if we get down into those lower numbers. Then we could look at doing some buying of some of these stocks. And still, even if it was buying, it would be so limited in time frame. I don't think you could hold a lot of it overnight. I couldn't think you're going to get 4 or 5 days of a rally. I mean, maybe that happens, but right now I don't see it. So that could possibly change. I don't know. The second formula is you gap up, maybe on some news, and you start taking off. I wouldn't buy into that bull market move either. I'd be looking at the stocks that got lifted up there, some of the junkier stocks, maybe like a Fit or a GoPro, and I'd look at some of those as shorts, and I'd go into some of these just right off the bat as shorts and let the market test me, let the market continue to roll up. So it could go either way. Heck, we might even get a flat market, and then we'll just have to go start all over again. Who knows? So kind of keep your eye on it. I gave you a couple of those levels there in the market. It doesn't really make a difference, and I guess the point of all of this, if you're sitting there and if you're biased to one side and you're hoping that the market does something to make your trades better, you're doing it wrong, because there's always opportunity out there. If you're a trader and you're looking for setups, you're looking for setups, and setups will happen in any kind of market. If you're just basing it because you're one side because you're always bullish and you're always buying, If you want to stick around the game, you're going to have to learn how to short. Same way, if you're always shorting all the time, you're going to have to learn how to buy. You're going to have to at least know how it operates on the other side to be effective for the long term. So if you need that kind of help, visit us in our live trade room. Take a 14-day free trial. Also remember, as I mentioned at the beginning, we're going to be doing a webinar talking about how our educational format works, how we build traders, as well as our upcoming Champ Camp, talking a little bit about the market, a little bit more in detail as well. So make sure you register for that webinar. As always, take care of yourself. I'll talk to you soon.